What if I told you the secret to getting rich is to buy things you can sell for a decade? In the 1980s, one man made this idea the cornerstone of a $40 billion fortune, and the entire financial world laughed at him. At first, this is the story of a secret formula, one that turned a university's sleepy bank account into a global financial juggernaut. It was pioneered by an unlikely hero who didn't work on Wall Street and who broke every rule in the book to win a game no one else knew he was playing. This is the story of David Swensen and how he changed investing forever. To understand a revolution, you first have to understand the world it replaced. Before David Swensen, the world of big money investing was predictable, it was safe, and frankly, it was a little boring. For decades, the undisputed king of investing was the 60/40ths portfolio. 60% of your money in stocks, 40% in safe, steady government bonds. For your grandparents' retirement fund, it was perfect. It was a strategy designed to protect wealth. But David Swensen wasn't trying to protect wealth. He was trying to build it forever. In 1985, Yale University's Endowment's permanent savings account stood at just over $1 billion. To manage it, they hired one of their own, a 31-year-old with a PhD in economics named David Swensen. He had briefly worked on Wall Street, but his heart was in academia. He wasn't a shark, he was a scholar. His mission wasn't to get a bonus. It was to secure the future of an institution he loved. And he looked at the 60/40ths portfolio that everyone else was using and saw a fatal flaw. This was Swensen's aha moment. A retiree needs their money within 20 or 30 years. But a university's time horizon is eternity. It doesn't need to worry about selling assets next year or even next decade. This single insight changed everything. It meant Yale could play a completely different game. While everyone else was focused on the next quarter, Swensen could focus on the next century. This unlocked his revolutionary blueprint, the Yale Model. First came radical diversification. The old 60/40ths model was like a diet of just bread and water. Swensen wanted a feast. He started buying assets most investors wouldn't touch. Foreign stocks, real estate, natural resources like timberland. While everyone else was fishing in a small, crowded pond, Swensen was casting his net across the entire ocean. But his second principle was the real secret sauce. It's a concept called the illiquidity premium. Most investors want to be able to sell their assets at a moment's notice. Swensen realized that this desire for speed comes at a cost. If you were willing to do the opposite, to buy assets that were hard to sell, you could get a massive discount. Think of it like buying a rare piece of art. You can't cash it in tomorrow. But because of that inconvenience, you get it at a better price, and its long-term value can be immense. Swensen was paid to be patient. This led him to invest heavily in things like private equity and venture capital. He was buying entire companies and funding startups years before they would ever go public. He gave money to 2 Stanford PhD students with a wild idea for a search engine. That company became Google. He was an early backer of a little venture capital firm called Andreessen Horowitz, which would go on to fund Facebook, Twitter, and Airbnb. And all this was tied together by his third pillar, an equity bias. Swensen believed that over the long run, the single greatest driver of wealth is not lending money, but owning things. Owning a piece of a business, a piece of a forest, a piece of an idea. This fundamental belief in ownership powered the entire model. So, did it work? The numbers are staggering. From just over $1 billion in 1985. The Yale Endowment under David Swensen grew to over $42 billion by the time of his passing in 2021. For over 2 decades, his fund delivered an average annual return of nearly 14%. It wasn't just a success, it was a paradigm shift. Naturally, everyone wanted to copy the formula. The Yale model became the Endowment model, adopted by nearly every major university and large foundation on the planet. Swensen became a legend, but his influence ran even deeper. The army of brilliant managers he trained and mentored left Yale to run other massive funds, a group that became known as the Swensen Mafia. He didn't just build a portfolio, he built a school of thought. Now, this leads to the obvious question. Can a regular person like you or me use this model? The honest answer is, not really. We do want to have access to the world's best venture capital deals, or the capital to buy a forest in Oregon. Trying to copy his exact portfolio is a fool's errand. But the true lesson from David Swensen isn't the what, it's the how. It's not about the specific assets he bought, but about the mindset he used to buy them. Think for yourself. Don't follow the herd just because it's comfortable. Understand your own time horizon and use it to your advantage. Be patient in a world that demands instant results. That is the wisdom of David Swensen. It's a lesson that can apply not just to your portfolio, but to your career, your goals, and your life. He wasn't just managing money, he was pioneering a new way to think. David Swensen's story is a masterclass in first principles thinking. But he wasn't the only one who broke the mold. Who is another financial genius whose story we should tell next? Let me know in the comments below. And if you love deep dives into the minds of legendary investors and thinkers, make sure to subscribe and hit that bell so you don't miss our next video.